The Harvard professor of economics that nearly a decade ago said that Bitcoin is more likely to be $100 today than $100,000 has admitted he was wrong, but in the worst way possible. Almost every word of this post is the professor trying to mitigate why he was wrong. Or as Tom Woods puts it, he insists that if everyone else hadn't acted so stupidly, he would have been right. This Harvard professor, former chief economist of the IMF and chess international grandmaster is Kenneth S. Rogoff. And I'm going to summarize his 3 reasons for being wrong about Bitcoin's trajectory. Number 1, he was too optimistic that the US policymakers wouldn't want to stop tax evasion and illegal activities. Classic stuff. Number 2, those illegal activities raised the price floor. By the way, his prediction was 4 years after the shutdown of Silk Road. And number 3, the Trump administration and its regulators hold crypto, and so there's a huge conflict of interest that he couldn't predict. So most of this is underpinned by illicit activity, which is a familiar criticism of Bitcoin and crypto, often leveled by Senator Elizabeth Warren. The problem is, it's demonstrably false. Extensive research by the likes of Chainalysis show that illicit activity is a tiny fraction of transactions. In 2020, an estimated 0.62% of transactions were linked to illicit activity. In 2021, it was 0.12%, 2022, it was 0.42%, 2023, it was 0.61%, and 2024, it was 0.14%, but that will rise slightly. And then to twist the knife on Professor Rogoff, Bitcoin's share of illicit transactions has been falling consistently courtesy of stablecoins. Meanwhile, the UN ODC shows that 2 to 5% of global GDP is linked to illicit finance. Look, if we were having this conversation in 2013 when Silk Road was booming, perhaps Professor Rogoff's claim about illicit activity would have held water. But let's be clear, Bitcoin's price is not above $100,000 today because of illicit activity. Instead, Bitcoin's 6-figure price tag is best explained by its unparalleled fundamentals.